What are the current business loan interest rates? But more importantly, what is the current prime rate and what could that be doing to your business if you are just getting started or if you've been in this for some time and you are looking for business funding? And hurry in before it's too late. If you haven't heard, as of today, November 3rd, 2022, the prime rates have gone up to 7%. They were at 6.25% and they went up by 0.75%. And that is a big spike to help try to curb off inflation. But a lot of things are happening right now that you have to be well aware of. And I'm going to be going into that. My name is Michael with Viral Funding Solutions. I'm a business loan broker expert, always bringing you the news on EIDL, prime rates, PPP, grants, the ERC program, and so much more. Now, I made a post in the Facebook group. If you are not a part of it, I'll leave it down below. It's an exclusive group for you as a business owner where you can feel very safe and secure and getting the latest and greatest information from yours truly and welcoming you in and so much more. But this post was made just a day ago and I want to go through it first on the prime rates, and then I'll speak a little bit about the different business loan interest rates. So here I said 2 million business loan revenue increases, dips, and fluctuations. Warning, do this right away. And you'll get to see that I made another video that I'll leave you down below in the description where I speak about what happens if you are looking to apply for a business loan in advance, whatever that may be. And are you getting in at the right time when your revenue is in the right place, your deposits? Perhaps you're going down or up and you're fluctuating, peaks and valleys, what you have to look out for, and how can that readjust an offer if you get one. So this is a huge warning. So please listen carefully or else you'll be kicking yourself over and over again. The interest rates, and I said here, could be rising by another 0.75%, which they have. Now this is readjusted to say the interest rates have risen to 7%. Prime rates, bank rates, the readjustments for those banks. And you're seeing this in the private lending space, and I'll show you or I'll more or less tell you that there's a prime rate plus a certain percentage that you get for certain services. So before the end of the year, which we already see that here in November, and after this year, or even before the year is over, they could be rising up even higher than 7%. Whether that's at the end of the year, going into December, or over 2022 into 2023, that could be increasing. Could it go down? Perhaps, but it looks more likely that it will rise. And if it gets to that high percentage of 8 plus in terms of prime rates, that's just the start. The prime rates plus 1 to 3% or 1 to 4.75% is what you're looking at. So for you to get the exact prime rate at 7% today or any other prime rate you see, you have to have very low risk. The prediction that you'll be able to service and pay back the debt without going into a default and going into collections. Your cash flow is very strong. Your credit profile, your borrowing power becomes greater with that. So the prime rates can be at 7% now. Maybe by the time you're watching this, that they have gone up or maybe a little bit down. But the trajectory, excuse me, we're going in exactly upwards. And what you need to be aware of is it's not just prime rates at 7%. You're seeing all these home mortgages, car loans, personal loans, anything you think about, really, it's become more expensive and harder to go out there and want to borrow money because of the liquidity and how much actual money you can get from a bank, let alone a private lender that they're willing to give you, and they're lowering the amount that they give people, and they're increasing their requirements and qualifications. So the prime rates, for example, on factoring, you can see prime rates at 7% plus 1 to 2%, plus 2.5% going into the early teens. So it's no longer at that 2%, 6%, 7%. You're looking at just perhaps below 10% if possible. And with other types of funding solutions, you maybe are looking for a business term loan or a line of credit plus 1 to 3% on top of that. So you could be looking at 12% at a minimum in a lot of cases, because you see 1 to 3% on business term loans per month. So if you had 12 months, that right there is at least 12%. Yes, you're above the prime rates, but nonetheless, the benefit has to exceed your repayments. And differences in lines of credit, 1 to 3%, 1 to 3.75%. Other types of solutions, it's 2 to 8% that you'll probably see. So just be aware. And then a SBA loan, as you see here on the screen, you may be able to get less than 10%, just depends on the service. More so those factoring products and asset-based, even that goes into the early teens nowadays. And with an SBA loan, you're seeing things like 1 to 3% on top of prime rates, or plus 1 to 4.75% if you're looking for an express loan where you get just below or up to 350,000. So 7% plus 4.75%. And if it's variable, it may be a little bit more, because it's not always a fixed interest rate you're getting because of the market changing. And if the interest were to go up, they would have to readjust your interest. And not only if the interest rates go up, but it has to do on your market and the evaluation of it and currently where it is. Look at fuel costs. Look what it costs to actually get a vehicle, to lease it, than to own it, or however you're trying to go about purchasing one. And that's only just one sector. Just imagine everywhere else that's being affected, and how hard and difficult it is right now in every industry. So on factoring, other secured financing, as I more or less mentioned. And I'll leave these services down below in the description. I left content on EIDL updates, EIDL versus the SBA 7A loan, EIDL versus the cash advances versus term loans versus lines of credit, business term loans, and all other types of financing. But I will also leave this questionnaire form where you can fill out to get a completely personalized and customized email response for your best funding option and options. Plus, you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster. So literally, you can get that done in less than a minute, and it'll be down below in the description. It can look something like this. It may change over time, or you may come to this part, and you'll want to select from one of the two. If you're a non-startup business with 3+ months in business, select that one. If you're a startup with less than that, click there, and it could look like that. If you were to click here, it will bring you to this form. So back to the topic at hand. So even unsecured financing products where the rates are already medium to high will likely be higher, and your borrowing power, you'll have to and I'll get into this in a moment, you'll have to become more efficient at understanding patterns in your business. And if you take funding that is medium to high rates / interest rates, total payback factor rates, that is not supposed to be the issue. The issue on hand is that you are assuming or wanting this 25, 30-year EIDL loan, home mortgage situation, and that's not how business loans advances work. Yes, you may be able to get up to 10 years, maybe up to 25 years with real estate when it comes to an SBA loan, or up to 10 years in working capital, but don't always be sitting on that. If you don't qualify for it, which I won't get into the qualifications here, I have separate videos down below on SBA 7A loans and so forth, then don't be fixated on that. Usually in this market, where if you don't offer up collateral, it's not SBA funding, you're looking at between 3 to 24 months, sometimes 3 to 36 months, 1 to 3 years, 1 to 5 years sometimes, and it has to make absolute sense, the return on that investment and what you're using the funds for. But a lot of the times right now with private lenders is they want to mitigate risk, so they want to make sure they get their money back as fast as possible. So it's more about the benefit exceeding your repayment, whether it's a medium to high or a low rate, whether you have a little bit more of a daily payment you're making, or a weekly, bi-weekly, or it becomes a bigger monthly payment. The difference is you taking that money, saying you're getting 20,000, you're paying back 27,000 over whatever time it is. Well, am I making more than 27,000? Am I taking this money and I'm making 30 with it, 40, 50, and I'm not just sitting on it? And if you're sitting on it, you're cash flowing positively and it won't hurt, then okay, it makes sense. And you have different uses for it. It may not be a huge percentage for growth and expansion, but that's what it should be. So depending on your borrowing power, how much lenders are willing to lend you, it'll be tougher to get closer to what you want and reach your funding goals much faster. And what I mean by that is you'll have to do it in increments, even with SBA loans and non-secured financing products. And it may not have to be where you have to offer collateral for an SBA loan, but what happens is you may think you have a number in mind where I want to get the full 100,000, 300,000, whatever it is, 50,000, but you are doing less in revenue. Well, you will not even get 30,000. You'll probably get 20,000 to start off with. So can you take that 20,000 and put it to good use and then come back, pay off 50% of it, add-on funds are available, increase your borrowing power because you already have that relationship. And then we increase your terms, drop your rates, give you more funding, and then you'll have to do it in more increments. And this will have to push you to understand your return on your investment on chunks and really plan it out. But there's a bright side to all of this. Here it is. You can get in early without having to scramble. And no matter what happens, your benefit has to exceed your repayment, as I mentioned. If this is up here and your benefit's down there, or even just aligned, it could be difficult for you to justify. So using your funding wisely is going to be more crucial, no matter the term length, and making sure you can use it to double, triple, quadruple your monthly revenue, your profit margins, your gross profit margins. What does it do with net income, if anything, profitability there? But there's another part. It really forces you to know the ROI, return on your investment. The funds will deliver for you precisely, and as well as this, getting credit both personally and in business in combination with the funding. So it's one thing that we're looking at prime rates increasing, and it's another thing to understand how to combine multiple products to get the most out of your funding borrowing. And what I mean by that is, hey, you have to want to separate your personal and business and make sure you are building business credit with vendor credit. And then you have credit lines on the back end that work like as a true business line of credit, that it's revolving. You have installment loans, credit cards, all these things that are building, and you're getting access to limits of 10, 20, 30,000, up to 150, up to 250,000 in corporate credit and more. So understand that you want to separate the two, work on your personal credit as well as your business credit, and I'll leave resources for that down below for free. You can pick up. But I would also start off with that questionnaire form, and I'll also show you that in there. And make sure if you want to add on top of that, business loan and an advance, you say you have business credit established by that point, you have 20, 30,000, whatever it may be, but you needed an additional 15,000. You don't want to use the credit cards. You can't use it no more. You want to use it to pay off credit cards. Well, you get an additional 20 to 30,000 on top of your projects. As you're scaling, you're looking for more, but it has to be reasonable. So whether it's November now, December, or any other month, you shouldn't always wait until the end of the month to start an application and take an offer. And here's where we pivot. Why is that the case? There's usually a bank verification after you've accepted an offer. So we do this whole thing where, hey, is this the offer? Yes or no? You can reply back to an email. You can send me a quick text. It doesn't always have to be an over the phone call. Like, yes, we may have a phone conversation where I go, hey, this is the offer. This is why it would make sense. Just remember the reason why you're getting funding. I will never pressure you. And always think about it. You have to grow. You have to build that relationship. And if you can get a multiple products in combination with it, yes, or you have to work towards that. I'll have a strategic partnership and roadmap with you. And that's the advantage of working with me as an expert. I know my stuff, and I've worked in every industry, helping every type of business owner of every type of background get the right type of finance and continue to move up levels. Or they're here, how do they go here? Or how do they go here? Or what do they do to move up? And what should they be doing in the meantime? So there's usually this bank verification after you say, okay, yes, I accept this offer. We are preparing the contracts. We'll send it out to you, usually hello sign or a different form. You sign those, and then we'll send you a decision logic bank verification where the lender can then deposit ACH a lot of the times into your account. And they want to make sure everything looks clean. Did you have a dip in sales? Okay, where are you now? What's something that stands out that, whoa, this wasn't there last month, or this wasn't there on one of the other bank statements. Why is it there now? So this will make sense in a second. So there's that bank verification, and it's a way for them to get their money back. It's very safe and secure, especially when you're working with me. After you've accepted the offer, and if you had a decrease in sales / revenue / deposits for the month you are applying in, the lender will very likely reduce your offer, rightfully so. So that's what happens. And I made another video, like I said earlier, down below in the description that goes into it further. But It depends on the time of the month, but more so, I would rather get in early as you can when your sales are like this. And even if they're not, I mean, I wouldn't wait. If you're projecting your sales to go down and you're like applying later on in the month, it's like, well, you had a higher month before, and then now you're like down here. You had 30,000 in deposits. You went down to 14,000. We had to readjust your offer 35,000 to 13,000. It's tremendously a lot. And again, even if you get that, is it worth it? Can you take it and benefit? Take it and benefit and grow over time. The lender will very likely reduce your offer, rightfully so. So if you feel and know your revenue will decrease come mid-month, later on, it's coming up fast or it's already happened, well, don't wait too long. And I made a video on this. Again, I'll link it to you down below. Please watch that video, or you can be content with good enough and having it to struggle, get the right type of business funding, headache after headaches, figuring out for yourself that this isn't the best way to do it. And you're applying to the wrong lenders directly or indirectly. And I know why that's the case, of why they reject you or why you're not going in the right direction. Be very careful. You don't want to have to be getting email after emails. If you are already, okay, but be very careful of that, who you say yes to. Please watch that video, or you can be content with it. You've been warned nicely that isn't a happy case. P.S. I'm getting caught up on questionnaires and email responses in the following days, so please be patient with me, especially if you have yet to respond back to your initial email. I know I've asked you that before, but I would greatly appreciate it. PPS, if you're ready to get funding and even credits, don't wait unless absolutely necessary, and you don't need a lump sum right away, and rather the LOC, line of credit by itself, or you can get a lump sum with a longer term to begin, which is not always possible and easy for everybody. And again, I'll get back to you. I just needed to get this email or this message out of the way. Talk soon, and then my name there. You see a quick picture there. So I'll leave this group down below if you haven't even gotten in, but I would start off with that questionnaire form. And you can see here on Wall Street Journal that effective Thursday, November 3rd, 2022, the Wall Street Journal USS prime rates will be 7%. The federal funds discount rate will be 4%, and the federal funds target will be 3.75 to 4%. So you see the inflation, U.S. Consumer Price Index, and all items. I have the. I'm gonna move this out of my way. Might get dark for a second because I have a ring around my. It's a lighting on my HP laptop. All items, and then the core international rates. You see that U.S., Canada, and Japan. The latest policy rates: Eurozone, Switzerland, Britain, and Australia. Overnight repurchase, other short-term rates. But I won't go into all this and bore you with all that. Let me bring this back, and then we'll close up shop here. Okay. So I showed you what's happening with the prime rates. I gave you more or less a way to go about getting funding in earlier before it's too late, in terms of, well, I wanted to get this lower interest and now I can't get it. Well, a lot of people can't even qualify for prime rates plus 1 to 2, 3, 1 to 4.75% if you're not getting an SBA loan. So regardless of it, you're thinking, well, I can't even get that. I'm getting rates of 19 to 70%, or I'm getting 19 to 30%. What does it matter? I'm getting 12 to 30%, sometimes 19 to 100%, depending on who you go to. So why does it matter? It does, because at the same time, the lenders, they're wanting to move their money as faster now, much faster, and they're being more precise on who they lend to. So in each industry, the amount you can get has gone down. For example, if you were to get a term loan, somebody in the construction industry who would have qualified for 200,000 is only getting 100,000, if any, 90,000 to begin with, because of the lender, and the market changes and they want to be secure about things. So they're lending less, and perhaps they may raise the interest on that, and they will probably lower the term a little bit. So instead of getting those 15 months, you may be sitting at 12 months or more or less. Instead of 18 months, you're getting 15 months or 12 months. So be well aware that the borrowing power and what you get in terms of interest, terms, the amount of funding, the flexibility is becoming a bit limited. And regardless of the fact, you have to have the benefit exceed your repayment. If you cannot come to terms with that, then you will continue to fight and want something that doesn't exist, because you're not taking this money and you're making more with it. That's what it should be primarily used at, especially if you're getting unsecured revenue-based funding based on your month-to-month revenue bank statements. If we needed to look at more financials on what's the trajectory of that and where you will be, what are you doing now, how much we can lend you to. So be realistic about that. And again, this form will be down below in the description. Oh, one other thing. You're probably wanting to know what the business loan interest rates are today. I mean, I've made separate content on that, so I won't go into depth so much. So I'll try to leave it down below. But you see the prime rates and any kind of unsecured financing, meaning no collateral involved, you could see interest rates right now between like 12 to 100%. And that's because the lenders assuming 100% of the risk. You don't offer up collateral if you see funding. You don't have more power involved. It's the same thing when it goes to prime rates. If you can get closer to a bank rate, that prime rate, because you're less of a risk, you have more assets, more liquidity, more cash, and your cash flow is up here in your credit. So we can reduce the risk. But if you don't have that, don't expect that. And it's not always going to be in your best interest to give up collateral, maybe to put a home on the line, give up real estate, equipment, maybe invoices because you have more control over what you give up, perhaps inventory in other forms. But yeah, you're seeing unsecured financing that small business loans like the SBA loans, prime rates plus 1 to 4.75%. So in this market, perhaps 7 to about 7 to 12%, and that number can go up, especially variable costs. Uh, Other types, we can get into cash advances similarly, 19 perhaps to 100%, 19 to 70%. Uh, Equipment financing is less. The other products you're looking at 6 to 30% interest, 7 to 12%, 7 to 25%. But your borrowing power becomes greater if you can offer up some kind of collateral and or you have stronger cash flow. We're looking at just revenue-based financing, and your month to month, you're increasing and it's consistent. It's not fluctuating, and you're not a higher risk. Your credit is probably up and better, so it gives you more power to do things. So I believe that is everything. Let me see it to make sure I covered everything. Yes, I did, and I'll leave this form down below in the description. But just to quickly recap, there it is, the prime rates. I went a little bit into also the different types of business loan interest rates, although I'll leave more content down below. And then I showed you what to do, not to wait. If you're going to wait after 2022 into 2023, and that's your plan, okay, just understand what comes with that. And if you're in a position where you want to wait and you have to wait, okay, there's nothing wrong with that. Just have the right expectations and right education. And that's what I'll show you. And I have released a Business Funding Mastery Academy course. So look down below. It should be for free, but if it isn't, it is well worth getting into, and it'll be well worth your time. It'll show you an education on everything and anything you need to know about. I put my sweat into it, and a lot of tears and a lot of stuff went behind that. So make sure to check it out down below, as well as all other information to get in contact. But the best way to do that is yes, to fill out this questionnaire. I have a process where you fill this out. I will evaluate and analyze, give you a proper response back via email. I'll let you know. And then you can usually get started there. There's like an application, lender there, or so forth, and you'll see where to go and you'll have more details. All right. So if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. And I didn't mention this. If you enjoyed this video, please give it a thumbs up, share it with others so you feel will get value out of it. And for any comments, please leave them down below and I will get back to you. That's it for now. Talk soon.